Hello friends, a very warm welcome to my channel. In this video, we are going to talk about LT Foods, which is a rice manufacturing company and now transforming itself gradually into a international or a global FMCG player. It's going to be a very interesting discussion. Do watch till the end. This is a small disclaimer as per SEBI regulations. You can pause the video and read it. Before we move forward, if you are new to our channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. This will be the flow of our discussion. We'll talk about the business model of LT Foods in the beginning, then we'll see the chart. Then we'll see the financial performance in the last 5 years. We'll understand the reasons for the consistent increase in the stock price. We'll understand the outlook of the management going forward. We'll talk about the valuations at present. We'll understand the risks of investing in this business and then form our overall view on the company. So LT Foods is a more than 7-decade-old year business. It is one of the largest rice manufacturers in the world. And now it is gradually transforming itself into a global FMCG company. Their popular brands in the rice segment are Dawat, which is very popular in India, and in US, the brand name is Royal. So they are diversifying into various consumer products now. They have presence in more than 80 countries and 1400 plus distributors across the globe. They have totally backward integrated. They have directly connections with the farmers, right from the farmers end till the finished product, they have backward integration. This is the broad breakup of the revenue in the different business segments. Even now, nearly 85% of the revenue comes from the basmati and special rice. Close to 12% of the revenue comes from the new segment, which is organic foods, which is mostly into exports. And about 3% comes from ready to heat or ready to cook foods. Now let's first talk about the rice segment in which this company operates, which is their main segment. In this, the company sells basmati rice, jasmine rice, and various regional varieties of rice. In this, the popular brands are Dawat, Royal, Golden Star, which they recently acquired, 817, Elephant, and Heritage. So there's a trend of premiumization which has led to the growth in the rice segment over a period of time. And the same trend is going to continue going forward also. Because in India, still the 70% of the people consume unbranded or unpacked rice. So gradually, when this gets transformed into a neatly packaged segment, these kind of companies benefit. A lot of Indians go and stay abroad in countries like US and Europe, and that leads to demand in such countries also. In the rice segment, this is the broad breakup of the revenue. 43% of the revenue comes from North America, 31% from India, 18% from Europe, and about 8% from the Middle East. In their organic foods business, which the company does through their subsidiary called Nature Bio Foods, more than 80,000 people in the farming families work with this company. In terms of products, they are exporting organic rice, pulses, oil seeds, and flour. If we talk about the organic export segment, this company dominates the Indian industry. Nearly 78% share in the organic export of rice, nearly 85% share in the organic export of the oil seeds. And they are setting up a new facility which is getting ready in Rotterdam in Europe, which is 15,000 metric tons. So once this facility gets ready, they will penetrate deeper and faster in the European region. They've also done an inorganic acquisition, acquired 30% stake in a company called Leave Organics. This is also into the organic food segment, more towards the consumer packs. So right now the company is focusing more on the B2B sales of organic food. Going forward with this acquisition, they will expand their B2C sales in the organic food segment. The third and the final segment is ready to cook or ready to eat, ready to heat products. Now the company has smartly done a forward integration for their own products. So they are already masters in manufacturing of rice and the other pulses. So they have forward integrated and made this into these ready to cook products. Now they are selling this in India as well as abroad. They are selling this in a hybrid model, both online and offline. They have created Dawat Biryani kits and they have sold more than 1 million units a year. They are also launching newer products like the Thai green curry kit, rice crackers, instant cups, and curry snacks. Right now, the Indian business is not profitable. The US business is profitable in this segment, and overall, this business will get profitable when they reach a revenue of about 350 crores in this segment, which the company expects that this can happen in the next 2-3 years. Now, let's look at the stock performance. Prior to COVID, the stock was doing well, but the returns were mediocre. The last high prior to COVID was around 110, but post-COVID, as they transformed themselves gradually into a B2C FMCG kind of a company, then the stock witnessed a massive rally. So along with the gradual increase in the revenue and profits, the PE multiple expansion happened and the stock gave a massive rally up to 520 rupees. From there, it retraced downwards up to 289 and now it is trading at somewhere around 400 range. They've done a pref at 142 rupees in 2023. So those who participated in the pref round also made good money in the stock. Overall, the stock still is in a strong uptrend. Now let's look at the financials. The revenue in the last 5 years, starting in FY21 at 4,700 crores and FY25 at 8,600 crores. In the last 5 years, it has grown at a CAGR of about 16%, which is a pretty decent growth. The best thing I like about this company is their consistency in the growth. EBITDA has also grown pretty well. They've done an EBITDA of about 562 crores in FY21, which has grown to 978 crores in FY25. EBITDA margin has more or less been constant in the last 5 years, around 11 to 12%. But going forward, as the B2C and the organic foods and ready to cook segment grows in terms of revenue, the company expects a gradual increase in this margin up to 14% EBITDA. This is a high inventory business because rice is seasonal. You have to buy it when it grows and you have to store it for a very long time. And the more you store it, the better the rice quality is for a consumer. So they invest a lot in the inventory, which takes a lot of their working capital. It's a face value one share. And in terms of EBITDA to cash flow conversion, about 65% of the 5 year average EBITDA is getting converted into operating cash flow, which is pretty decent in terms of cash flows. The company is getting another income of around 117 crores. So this makes EV EBITDA as a more suitable metric for valuation of this company. Now, what led to the consistent increase in the stock price over these recent years? There was strong demand in the rice sector and premiumization trend led to the consistent growth in sales which the company has done. The company has done geographical expansion, which played out pretty well for this company, and the FMCG products are also doing good. All this led to the re-rating of the multiple, and higher multiples led to the better performance of the stock price. Before we move forward, if you haven't joined our Telegram channel yet, do join today. It's a free channel. Every day we speak about the markets in the morning, and we also talk about most important news and views, portfolio allocation strategies. So you can stay connected with us on a daily basis through our free Telegram channel. Now let's talk about the growth outlook, which is the most interesting part of the business. We'll talk about different segments separately and then an overall view. So the rice segment in specifically North America, which is the largest geography, can grow by 10 to 12% going forward also is what the management says. They are getting a UK facility, which is specifically for the rice business. Post this, the European demand also will grow. And I said Indian market still 70% are consuming the loose rice. So there is still scope to penetrate the market here. Now coming to their organic foods, the new facility of 15,000 metric tons is getting ready in Rotterdam. This will improve their B2B as well as the B2C business as they have local presence there. And this 30% stake which they have taken in Leave Organics can be increased going forward. And this will also help them penetrate the B2C segment. Coming to the ready to cook food segment, these kind of kits which they are creating are doing pretty well. The biryani kit, the Thai green curry kit, they are doubling their production capacity in India as well as US as they are getting good response for their products. And we discussed that the break even will happen at 350 crore in the next couple of years. Going forward also, they are open to do inorganic acquisitions for their growth. Recently, they have purchased 100% stake in a brand called Golden Star in the US for their rice segment. They have done a JV with a Japanese company which is into snacks making called Kameda. The margins may expand to 14% going forward. In terms of profitability growth, we may expect a growth in the profit after tax at around 21% CAGR going forward, EBITDA around 16% going forward, and mid-teens growth in their revenue. Now let's talk about the valuations, which is the most critical part. Right now, the company or the stock trades at around 24p, 4 times price to book, EV EBITDA of 14x, and market cap to sales of 1.7x. So prima facie, the valuations would look cheap, but as still 85% of the revenue comes from the rice segment, we can say that the market has already priced in partially their FMCG transformation from a rice company. The last few years, median EV EBITDA has been somewhere around 7 to 8 times. And right now it is trading at around 14 times. So if you look at this, the valuations do not appear so cheap. But the market believes that their FMCG business will do well. That's why the company has started getting higher multiples than the other rice makers. Now, what are the risks of investing in this business? The raw material fluctuation and availability of the raw material, specifically the rice, will impact the business to a drastic extent. If they have a very bad season in the rice, that could impact the business. It's a working capital intensive business, so how efficiently they manage the working capital determines the cash flows and the profitability of the business. As it's an international business, there could be several regulatory risks in different countries, like the US tariffs, etc. Geographical concentration is a risk because a lot of their revenue comes from the US. There is competition, although the company is one of the leading in their sector, there is competition and peer pressure on the pricing what they do. And this transformation, what they are doing from a rice company to an FMCG, always has execution risks. So this is a broad explanation about the business of the company, the growth aspects, the valuations, the financials, the risks. So post understanding all these aspects, what is our view on the stock? If you're holding this stock from a very long time, going forward, the management looks very clear and confident about a sustained growth and slight margin expansion also. So you can continue to hold this stock. But if you're looking at a fresh entry, prima facie the valuations may appear cheap, but the sustainability of this valuation multiple going forward depends on how well the FMCG business does. If the FMCG business goes on expanding and turns profitable, then these valuations are justified. But if the FMCG business doesn't do well, then the valuation may get derated back to the rice business multiple. So it is always better for a new investor to accumulate this stock in a gradual manner and don't jump into it and take a full position at the current price. So that's about LT Foods. I have tried to compile all the important points in this crisp video and put it in very simple words for your understanding. I hope you like this video. If you like it, hit the like button and subscribe to the channel. If you want me to make more videos on your favorite stocks, do mention the names in the comment section. Do join our Telegram channel by clicking the link in the description button. Thank you for watching and have a wonderful day.